contractual right to receive or deliver cash, that is all. So then normally this asset could be on cash or share or in the form of bond. Finance securities are a type of finance instrument which can be traded at a stock exchange. So then financial securities are type of financial instrument. So then financial securities also a type of financial instrument. So then they can be tradable in a stock exchange. So we are going to discuss a little bit on detail all these things. Okay, type of financial instruments. So then based on the duration, we are dividing into these big instruments. So normally when the duration is short, so we know the main is very famous debt instrument is T-bill. When the duration is short means it's below 1 year. So another instrument that we can consider, interest rate futures, forward rate agreement instrument, that means all these things. So then, as I said to you, we are going to discuss in detail on interest rate futures, forward rate agreement, option, and all these things, interest rate swaps, all these things in a little bit later. Until that, we are having a little bit of idea. Okay, then the short-term debt instrument means maturity period is below 1 year or less. Very famous example is for this is T-bill or treasury bills. So then when the duration is over 1 year, so then this sort of debt instrument will go the long-term, as well as the main. That means very famous example is the bonds, especially T bonds or treasury bonds. So another example that we can consider bond futures, options, interest rate swaps, interest rate options, interest rate caps and floors, all these things. And further, when you talk about debt instruments are typically agreement where finance institutions agree to give a money loan to a borrower in exchange for set of principles and interest rate over a set of years. So then we know some debt instrument we can take in various ways. That means can be a loan or mortgage or lease, bills, so on, but in various form we can consider. So then in that we know it's an agreement between the borrower and the lender. So then so when we borrow, so then we need to pay the sometime principal plus interest, or altogether once it get mature. So when you know that when you talk about a simple loan, so sometimes the principal plus interest will be there, and it's sometimes it's differ loan to loan. So they initially the higher portion of interest will be deducting and risk capital. So then like that various form of loan, mortgage, and these things also we could identify. Apart from that, bills and bonds when it mature, we need to pay the interest plus a principal amount. So basically anything that obliges a borrower to make payment based on a contractual agreement is debt instrument. So then if anything that we oblige to a borrower to make the payment, so then based on contractual agreement, we'll call a debt instrument. So then equity-based instrument is stocks. So then this can be considered as stock options or equity futures. So then these are example is equity-based instruments. So then FX instruments or foreign exchange instruments. So then under this they are saying there are no securities under the FX. That means on foreign exchange. A simple example is the FX futures, FX option, override forward FX. So then those things as I discussed. So then we have a in detail discussion So then at that time we will study. We just skimming this area. And so when we talk about the stock foreign exchange means spot foreign exchange means so at that time, so then when you are going to convert one currency to another, so then they consider the at that time exchange rate accordingly. Then they will convert. This is much famous. Assume we are going to buy a $1, so then they consider what is the rate of dollar at that time. So then accordingly, you can get $1 after giving amount of Sri Lankan rupees. So at that time they will charge some service or facility as well. So then equity instruments are papers that demonstrate an ownership of interest in a business. So unlike debt instrument, equity instrument yield ownership and some control of business to investor who provide private capital to a business. Stocks are example of equity instruments. So then under the equity instruments, so then once we the main that means identification of this equity instrument is rather than the debt instrument, so then ownership is there. So that means that you control of the business. Once we buy some sort of equity from a business, so then we have control on that business rather than the other debt instrument. So this is a simple example. Sorry, this is some snapshot or summary what we discuss all these things. So that means over 1 year, bonds and loans, and less than 1 year, as we discussed, T-bills, commercial papers, and all these things, equity stocks and foreign exchange. We discussed it's about a security like that. So these are the example, right hand side. Okay, then we are moving to the financial market. Financial market is a term describing any marketplace where trade of securities, including shares, bond options, currencies, and derivatives. Okay, so the example of financial markets are New York Stock Exchange, Nasdaq, Colombo, London Stock Exchange, Tokyo Exchange Rate. So Tokyo Stock Exchange rate can be considered. So then, when you come into the financial institutions, a financial institution is an establishment that conduct financial transactions such as investment, loans, deposits. So then here the investment can be considered. So buying government securities or investing on various ways. So then can be considered. So then the lending part. And this is also deposit borrowing part. This is also liability. So then, so the example of financial institution, the main is central bank, then licensed commercial bank, licensed specialized banks. So then we are going to discuss all these things, forming licensed commercial banks, specialized bank, and licensed finance companies, everything in our country, Sri Lanka. So then, what is their main features and all these things we are going to discuss. The specialty company, microfinance company, all these things are considered as a financial institutions. So then, financial markets. So financial markets, we are considering in 3 areas. Type of financial market and classification of financial market and primary and secondary market. So type of financial market as we discussed, so there will be a bond or debt market, then there may be equity or stock market and foreign exchange market as we discussed previously. So then classification of financial market can be money market or capital market. So then this is also on duration. So then the primary and secondary market. So then all these things we are going to discuss a little bit in detail. So then type of financial market, as we discussed previously, bond and debt. So then debt market or bond market allow government, corporation or individuals to borrow to meet any financial requirements. So then if government or any corporation or individual, especially this is happening when government need money, so then they issue securities, even a bond or bill, physical bond or physical bills. In this market, borrower issues a security, example bond instrument, that promises a timely payment of interest and principal over specific time horizons. Simply, for a simple idea. Okay, then we'll take this one and say the interest is a cost of borrowing. So then the simple example is you may have seen a FD certificate, so fixed deposit certificate. So once you assume you deposit 50,000 in a bank, a commercial bank, or whatever the famous bank. So then they give a certificate. So in that we may have seen the amount that we have deposited, assume 50,000, and the interest that they are paying. So it's it's 15, 20, like that. They have mentioned the interest rate. So the maturity period, how long? It's 6 months or 1 year, everything. So then after it matured, how much you are getting. So all things has mentioned. They're simply like that. So so then this is the bond also quite like this one. In that this the paper bond, that means this sort of paper type of bond quite like similar to the FD certificate. So in that all the information has they are going to mention in here. So in that interest is a cost of borrowing. So then interest rate is a cost of borrowing. So assume if you are borrowing, if you are getting a loan from bank 50,000, so then in the end of the day we need to pay 55,000. 5,000 is a cost of borrowing. So if you borrow, so then it's a cost of borrowing. So then the lender is a profit for them. So like that, same thing. If we are not using, central bank is not using this sort of paper type of bond, so then we use electronic type of bond. So then in this various type of security issuing, also we have a separate topic. So in that we are going to discuss in detail, but now we are not using this paper type of securities. We are now using all our electronic type of securities. So then stock equity market, the market for buying and selling of stock shares. So then we discussed that. This is New York, London, Tokyo, Colombo, like that. Whole stock market can be considered as company. Initial shares, sell shares in primary market to raise money, but later these shares trading investors in secondary market. Normally this secondary market we call this stock market. And the primary market selling we call it's IPO, initial public offering. Of all the active market, the stock market received the most attention from a media, probably because of its place where people get rich and poor. So this is the scenario because of people. Normally the stock market is for investment, but nowadays most of the investors use this place as a gambling. So that means to be rich quickly. So then, so as of this matter, sometimes some may get rich or something, someone lose all the money within a day or two. So then it's quite like a gambling. So now this, apart from the investment, some investors has used this for gambling as well. So then next point is foreign exchange market, the market where buying and selling of foreign currencies. So the fluctuation of foreign currencies matter. So then we all see why the fluctuation of foreign currencies matter. So then fluctuation means going up and down of foreign currency. In here, exchange rate depreciation means we need to pay a large amount of money for get $1. So if it is happening over and over, that means assume, for simple example, we take a simple example and simple figures to understand this. Assume in 2010 to get $1, we spent 200 rupees. Now in 2022, we spent 300 rupees. Now we spend 100 rupees more to get same $1. So in that case, you call exchange rate depreciation. So then we can see nowadays we get more and more dollars from outside in various forms, IMF loan and various government assistance in China, India, some other Japan, various ways of funds is receiving. Now we can see a little bit of appreciation, but lastly it has again been depreciated. But anyway, we'll assume this because these scenarios, as of these scenarios, exchange rate get appreciated. Now we need to pay a lesser amount. So then since we are paying a lesser amount rather than earlier, so then we'll call this is appreciation. So then this is simply we'll call appreciation and depreciate. So then in this example, you see, for instance, when Sri Lankan rupee appreciate against US dollar, so then appreciate US dollars mean to buy $1, we need to use less amount of Sri Lankan rupees. We need to use less amount of Sri Lankan rupees. Purchase of domestic fall and domestic and the demand for increase of import commerce. So then what is the concept behind this? So then why the purchase of domestic fall and demand for the import commodities tend to increase? Normally it's this is the case. So then when exchange rate appreciate means to buy a US dollar, we need to have less amount of Sri Lankan rupees. Most that we call that all over the world, the trading happening through US dollars. That means the main currency for trade or quoting the price is US dollar. So then, if the US dollar get appreciate, we need less money. So then, we can buy those commodity at a cheaper price. So why? We need less Sri Lankan. So then we try to import more and more. So then when we try to import more and more, so with this exchange rate appreciation, import commodity price is cheaper than the domestic price. So then when the imported price is cheaper than domestic price, so then people tend to buy or motivate to buy imported commodities. So then they are not buying domestic. So then it results when we are not buying one potato, and if we tend to buy imported potato, India, Pakistan, or some other potato, so then local farmer suffer. So why they couldn't be able to sell their products? So that's the scenario behind this. So then classification of financial market. So then in this one we discuss it's money market and capital market. Money market is normally we call a short-term market. So that means its market is 1 year or less than, but the duration is short. So that means maturity is short. So main example or very famous example, treasury bills, commercial papers, CD, certificate of deposits, and SDFR and SLFR. So then we are going to discuss on this point of that means the in other way, you can say repurchase sell. So then these things are short-term securities. So money market instruments also called cash investment because of their short-term maturity. So then they're saying investing in money market is a cash investment by within a short period of time. Sometimes treasury bills, some within 3 months, 6 months, like that. So within a short period of time, the return is there. So then, as of that reason, they name this as a cash investment because of its shorter maturity. So then, capital market is when the duration of the securities is more than 1 year, long term, maybe until up to 20 or 30 years. The example is corporate bonds. Government bonds means, government treasury bonds. Stocks can be considered as a capital market. So then primary and secondary market, we know the primary market where the initial public offering is happening. So then new issues, also IPOs also sold in this primary market. Secondary market means, we discussed, it's a stock market where secondly these trading assets were going to trade. As example wise, Colombo, New York, Nasdaq is considered. Yeah, so then we are going to discuss the regulation of financial institution. So then under the regulation of financial instruments, so then we are going to have an idea about what are the regulators of these things. So under that, we are going to discuss in 3 regulators, and we are going to discuss in detail. So then we'll see, is there any question for that? This question regarding the PowerPoint. I hope I shared this PowerPoint in advance. Did you receive it?
Yes, sir, we got it.
Yes, sir, we got it.
Thank you. Fine. So then, so now we are going to discuss the regulators. So we are going to discuss main 3 regulators in our country. So first is Central Bank of Sri Lanka, then SEC, Securities and Exchange Commission. Then the third one is Insurance Board of Sri Lanka. So we'll see under the Central Bank of Sri Lanka, regulation and supervision of bank, finance companies, finance leasing establishment, and primary dealers. All are going to discuss under the Central Bank. So in detail discussion we are going to have. So then under the SEC, regulation of market intermediaries, stockbrokers, and dealers, companies of unit trust. So then in here also we are going to discuss for the that means parties that SEC is going to regulate. So then Insurance Board of Sri Lanka, everyone know that all the insurance companies and brokers are going to, that means are regulated by this Insurance Board of Sri Lanka. So we keep eye on heavily on these 2 first and second. So our syllabus is mainly focused on number 1. We are going to discuss a little bit of 2 as well. So when we talk about this second one, so then we'll take this one next. Since first we come to this one first. So then Central Bank of Sri Lanka, the regulation of the finance institution. So then we take this one first. We are having under operation around 32. So we are going to have idea also, but once we get the list from CBSL, it mentioned, but they have clearly mentioned what's happened. But initially they are listing, but actively operation is 32. So then other financial instruments which is regulated by CBSL, primary dealers and specialized leasing companies, licensed microfinance companies, and authorized money workers also subject to regulated by CBSL. So institutions that are not regulated by CBSL, deposit-taking institutions, rural bank, and thrift and credit cooperative societies. So then who's going to regulate this? This is regulated by Department of Cooperative and Development. So then contractual saving institutions, this can be considered EPF, ETF, approved private provident funds. This is regulated by Department of Labor. So then approved provident funds is some private provident funds. Okay, sometimes this private provident fund is depend institution to institution and some private sector to private sector. Anyway, this is regulated by Department of Labor. And public service provident fund, insurance companies. So then all these things are contractual saving institutions. So then we know that insurance companies is regulated by Insurance Board of Sri Lanka. So then other financial institutions, stock broking companies, unit trust, management companies, market intermediaries, credit trading agencies, venture capitalists, all these things are regulated by SEC, Securities and Exchange Commission. So then, yeah, we had a little idea how we will come from here, from second. So then, when you talk about the second point, Securities and Exchange Commission, so we'll have an idea a little bit on this one. So then under that we have market intermediaries. So then once again we will come to this one so you can easily understand. See, you can in this Securities and Exchange Commission, they have mentioned all the listed all these categories. So then, and by example wise also they are given. Okay, then we'll try to get slowly about all these things. So then, under this market intermediaries means market intermediaries can be considered as money providers, investment managers, underwriters, clearinghouse, and credit rating agencies coming under this category. Stockbrokers are providing broking facilities for stockholders to trade in stock market. Stock dealers engage in share market on their own fund. So then once you have a little idea on unit trust, an organization which takes money from small investors and invest it in stocks and shares for them under trust. The investment bring the form of shares in the trust. Unit trusts are typically invested in bonds. So then this is a simple idea about unit trust. So under the margin provided, so then we'll take this first, so then you can understand it. So then what is a margin call? In the event of loss, a margin call may require a broker to liquidate securities without prior consent. In the event of loss, a margin call may require your broker to liquidate securities without prior consent. Margin refers to the amount of liquidity an investor has in their brokerage account. To margin or buy on margin mean to use money borrowed from broker to purchase securities. So uh, that means use borrowed money from broker to purchase securities we call margin call, and this is the provider we call the margin provider. So we'll have a little bit idea from this kind of things. These are not difficult, so you can read and clearly understand. The term margin refers to the same thing that's written here. The term margin refers to the amount of deposit with the borrower. Brokerage when borrowing money to buy securities, and the said facility provider called margin provider. Similarly, it explained further, an investor buys securities on margin. It means they are used borrowed money. So that means for the transaction, they use borrowed money from the brokerage to invest in securities. That means must they use the borrowed money, we call margin call, and provider this one, the facility provider will call a margin provider. So then we are going to have a little bit idea on underwriter. So underwriter is a process through which an individual or institution take on financial risks for free. So then they are taking a financial risk for free. This risk mostly typically involve loans, insurance, or investment. The term underwriter originated from the practice of having each risk taker write their name under the total amount of risk that they were willing to accept for a specific premium. So then it's quite like they are taking a risk on free for these securities. Although the mechanical change over time, or this mechanism has changed over time, underwriters continue today as a key function in the financial world. So that's the so that means for quite like a risk taker. So then that means risk taker on debt securities. Simple idea. So as I said to you, we'll try to add this one for this. See, market intermediate. So then they have categorized market intermediate as we discussed: margin providers, investment managers, underwriters, clearing houses, credit rating agents. So then they have clearly in this one they have clearly mentioned who is coming under this one, under the margin providers. Example, and clearing house, CD, central deposit system. We are going to discuss. This is the place where all the securities were stored when they introduced this debt trading. So earlier it was on paper based, now they have introduced on electronic. Once they introduced the electronic, so all this information was so then here and unit trust. So then example of unit trust. So then these things were there. Yeah, ETF is regulated by CBS. True. So this is there's a separate entity on the central bank employee. So then that department is regulated by TBO. Yeah. So then depository taking institution or depository institution are highly regulated because of the important role they play in the finance system. So then depository institutions are highly regulated by this system. Why we discussed that if something happens for one institute, so it will affect for all. So then, because of that reason, so all the depository institutions were highly regulated. Thrift and credit cooperative societies, which are specialized type of depository institutions. So then, the simple example is Sanasa Federation. So then, this is not regulated by CBSL, but the separate entity is there to regulate it, sort of cooperative societies. In Sri Lanka, there are commercial banks and non-commercial financial institutions to accept deposits. So then in Sri Lanka, uh, commercial banks. So then commercial banks means we know the famous one, and non-commercial bank finance. That means which are not uh, mm, regulated by CBSL. These things also authorized to accept deposits. So simply like rural bank, thrift and credit cooperative societies also they are willing to uh, uh, that means they are also authorized to accept the deposits as they are willing to or authorized to lend a small type of or a small amount of or a small volume of loans. No, we are not going to discuss cryptocurrency. So then we are moving to the point. So then as we discussed, now we are going to discuss the according to this slide 26. So the institutions that are regulated by CBSL. So mainly we focus on these areas. This side, left hand side, license commercial bank, license specialized bank, and all these things. And we are going to have an idea about all these things, features. Yeah. The major institution regulated by CBSL. There are three major categories of financial institutions that are subject to licensing, regulating, and supervision of possible by the central bank in the public interest because they accept deposit from the public. So then this is also regulated, but they're saying these three is highly regulated, more act or regulation is there to regulate this first three. So higher attention, higher regulatory framework is to keep attention on these first three. Just the idea here. The licensed commercial bank. The bank authorized to maintain current account. So current account means demand deposit. Maintain savings and FD, fixed deposits. So then this licensed commercial bank, the type of this that we call them, this type of bank, they are authorized to maintain or issue checkbooks or maintain demand deposits and maintain savings, various type of savings, and they like to give time digits FDs, I said. In addition, they undertake a wide range of financial services such as loan, facilitating international trade by opening LC letter of credits, owning, advising and assets on investment matters. That means when you are going for a initial public offering, so then they assess this one and make and monitoring all these things. And then the next one, facilitating international finance transfers. So then all these international finance transfers also they are managed. Moreover, authorized to deal on foreign currencies as a authorized dealer. So then the other one who authorized to deal on foreign currencies. Special right they have given for these entities, so they can buy and sell. So that means buy and sell means they can buy Sri Lankan rupees and they can issue whatever the authorized foreign currencies. So assume Australian dollars, US dollars, pound, whatever the required currency and authorized currency, they can also they can accept US dollars, Australian dollars, pound, sterling pound, and whatever the authorized currency, and they can issue the Sri Lankan rupees for that currency, considering the present or current exchange rate values with a charge of their facility charge. This facility hasn't given forward, so we are going to discuss that point also in this slide. This under this topic, not all having this side. So only few, that means only the licensed commercial bank having this right. Okay, we're going to discuss that point also. So minimum capital requirement for a licensed commercial bank is 20 million. So then earlier it was, the amount was little, now they have increased for sustain of this commercial bank. So then once they have this much of capital with them, the sustainability is high, then so then they can do a good finance and transaction. So as that reason, in 2017, they have increased to this amount of minimum capital requirement. So we are going to see the licensed commercial bank as of December 31st, 2022. So this the red color one now is operating. So at present we have 24 licensed commercial bank with amount data to Indian Bank of Colombo PLC. So this one, the number 18, earlier it was named as Public Bank, Perhut Colombo branch. Now they have removed this Colombo branch part. Yeah, okay, sure. Fine, yeah. So then we'll go to the next one. So next point is licensed specialized bank. We are going to see what are the main features of licensed specialized bank assets. So normally we have 6 now under the operation. So this one, the red color one, that now it's not under operation. So then these banks are different from commercial banks and not authorized to accept demand deposit. That means they are not authorized to simply issue checkbooks. So they are not authorized to issue checks. That means so in we call this one, they are not authorized to accept demand deposits. So then, as well, they are not authorized to deal on foreign currency. So then these entities or these financial institutions are not authorized to deal on foreign currency. However, they are authorized to accept saving and time deposit. So then they accept to get saving and time deposits, and on some lending facilities in the form of leasing or hire purchase. Minimum capital requirement as of 2017, it has increased it to 7.5 billion Sri Lankan rupees. So these are the 6 examples of
Hello, Shankar.
the licensed specialized bank as of 31st
Hold on,
of
man.
December 2022.
Hmm.
So then the third one is licensed finance company. This is mostly highlighted and highly volatile financial institution. So then most of the time, a lot of that means changes happening. Sometimes most of the policymakers they're saying because of less capital requirements. So then to form this sort of financial institution and need less capital requirements. So then the problem with the stability and the maintaining and all these things, especially the administration of all these things were effect for these things. So we are going to discuss a little bit on that. A registered finance company is a company registered and licensed by Central Bank of Sri Lanka, accept time deposits and lend and invest such money. So they do not maintain current accounts. They are not authorized to maintain current account, but they authorized to lend, leasing, or hire purchase, or some machinery loans, whatever it is. So minimum capital requirement was 1 billion. Now it has proposed to increase 2 billion of Sri Lankan rupees. Once you see, you can see there changes. So then earlier these things are people finance, Dream Food. So then Dream Food was there until the last year. Now it has not operating. City Finance, Colombo Trust, Commercial Leasing Finance, ETI, ITL, Cambridge also now they have merged to National Lanka through Finance PLC. LOC Development merged to LOC Finance. Melstar, Regal Finance, not operating. Prime Finance, Serendip, Singapore, Summit, Swarnamal Finance, the finance company, Standard Credit Finance, TKS, Trade Finance, and investment like that. See, the time to time. So then at the time, there was a boom of all these things. So it was I think in before COVID, in 2019, there was more than 40. But slowly it has been coming down. Why? They are volatility and the sustainability to face the economic change. So once we financially strong, we have good capital, and if you do a good administration, so then you are strong to manage. But if you weak on all these things, all these areas, so then the possibility to that means raise questions or problems to maintain those things. So at that time, so then central bank intervened, and this one happened on last few years as well. So then central bank introduced to merge to some others and asking to acquire all these things. So then simple example is this multi-finance. This LB Finance has acquired around 65% last year now. So they are identifying this is not operating fine properly. So then they merge to LB Finance like that. So then if they are not operating well, so then central bank instruct to merge to some other finance company. Another example like Cambridge Finance as you can consider. Some operating productively and strongly without any difficulty. Yeah, red color perform non-performing things. That's why I haven't given number. So that's why I haven't given number for these things, red color. So these are not performing now. But it was early performed. So then rather than mentioning the perform one, I was mentioned what happened, how it was changed everything for having an idea. I have take into consider the which was not operating or not. So these are the black color one is only operating. And the blue color it has mentioned what happened and what is going on, all these things. And red color is not operating. That's why I haven't given numbers for them. So then for the moment actually operating is 32 32 licensed finance company as at April 23rd, 25th. Yeah, so then these are a simple I think this also. So these are a little bit of explanation of insurance companies, investment companies, and type of investment companies, all these things. Unit trust and all these things. What is the simple idea of investment bank and all these things. Merchant bank, all these things can we understand. And then the yeah. Before we come to this one, we'll go to this slide and then we come again. Is it visible, the Word document to you?
Yes, sir.
Yeah. So then in this document, I have shared to have a little bit of idea how the expansion of the financial system happened in Sri Lanka. So then what happened when it come 1950, there were only six exchange banks. So then how it has dispersion, everything was simply I have noted it down. So then when it come to what is the performance of CBSL objectives and specific objective, everything we are going to discuss in detail. But central bank was incorporated under the Monroe Act, which was introduced in 1950. Do you all know?
Right.
So then we know there's the main objective is economic wise and financial system stability of the country.
කොළඹ මොනවද නිකන් යක් හැපනින් තැනක් සැටර්ඩේ නයිට් යන කැලලක් එක්ක වගේ.
So normally we call the central bank is a administrator to the government. Some of them are the banker to commercial bank.
Right.
So normally we mention the central bank is the banker to the commercial bank, banker to the government, an agent of government in the form of financial advisor, financial agent, control of exchange rate control, administration of EPF, Employee Provident Fund. There is a separate department in central bank. So in that they administer the this EPF. The collection of this provident fund is doing through labor department, but it's accumulating. Fund is operating by the CBSL and investing and managing all the rights having to the CBSL. So then we'll have a little bit of these things. As an agent of government, central bank, this talk about central bank. The central bank is responsible for managing the government debt. The government of Sri Lanka, like any other institution, borrow money to finance its expenditure program. So that means government expenditure program. The purpose, it issues various type of debt securities. The central bank undertakes the function of issuing these securities on behalf of government. So then, if the government need money, central bank issuing securities and finance to Treasury to meet those requirements. So then let's talk about how these T-bills will happen. The maturity of T-bills, 91, 182, 364. The mainly three securities, Treasury bond, general development, and rupee securities. Nowadays, rupee securities are not performing that much. We'll go and discuss on it in detail. Then licensed commercial bank and other institution incorporated for business of dealing government securities are eligible to apply for, considered for appointment as a primary dealer. So sometimes apart from the primary dealers, so then some commercial banks also appointed as primary dealers, so then they are responsible to do on primary dealing activities. So the public debt department of central bank is responsible for supervising primary dealers. So this is how the expansion of licensed commercial bank from 1977 was mentioned here. If you can read it and understand. And when it comes to 2018, how it was, and you can see we have discussed the latest situation. So you can read and have an idea how it is. And licensed finance company said 2018, now what's the situation? See, as I mentioned you, when it comes to 2018, see the list of finance companies in 2018. So it has listed around 44. You can see now when it comes to 2023, it has gone down to 32. You can see some whichever the things that I have mentioned in the slide, the PowerPoint slide, also you can identify. See this DRAC, and I think
නෑ එල්ල මං කොතන මෙතන කළු පහනනේ මං ගිහින් තියෙනවා.
So those who are not private dealers, how can they participate in the bond and the bill market?
Who? I am not clear. Your question, please.
So those who are not primary dealers, how they can participate in the market operations?
So they cannot participate. So they can participate through primary dealers.
Through primary dealers, right?
Yeah, true.
Okay.
Kian yana berman.
So then in here, when it comes to licensed leasing companies, so we talk about licensed leasing companies. So these are the licensed leasing companies, and this venture capital and authorized primary dealers as at 2021. So we have a separate topic. In that case, we are going to discuss in detail about primary dealers. Here they have mentioned the perpetual accessories and all these things.
Okay.
So then see, we'll talk about little bit since we have raised on primary dealers. A primary dealer is a specified intermediary in the government securities market appointed by CBSI. The main purpose, helping to build stable, dependable source of demand for securities by effectively participating in the primary auction. Second, providing liquidity to secondary market. Third, building distribution channel. Fourth, providing market information including price, volume, and the spread of between bid and offer. That means in here they are saying price means bid price and volume means how much bid we are going to offer and all these things. So these are the unit trust management companies. This is the one that I need to discuss with you. See, institution and persons authorized for transaction in foreign currency. Authorized dealers. All licensed bank and at present have been permitted to deal in foreign exchange as authorized dealers, and they have an authority to enter into a transaction of buying, accepting, selling foreign currencies with eligible parties. You can see buying, accepting, and selling. Buying, accepting, selling. Okay, these three things are there. Then authorized money change. Permitted to buy foreign currency not in foreign exchange of Sri Lanka. Not permitted to sell foreign currency for rupees. Unless permitted, they are permitted to convert travel exchange. So then authorized money changes, they permitted to convert travel exchange. If they have $10 travel exchange, then they authorized to convert it to Sri Lankan rupees. So they authorized the other establishments authorized to accept payment in foreign currencies. So then authorized hotels, gyms, jewelries, supermarket, travel agents, duty-free shops, hospital, agency post office, and harbors. So then selected establishment and traders have been authorized in control of exchange. So then they can convert. So then after getting dollars or whatever the currency, foreign currency, they are willing to provide their service. That means they cannot do anything. Simply assume in a hospital, if you get a service, if they are accepting these foreign currencies, you can settle the payment by giving a foreign currency. So that's the idea. Some supermarkets also are accepting foreign currencies, especially some that means main supermarkets, and especially the duty-free shops. They accept and gem and jewelry hotels. Anyway, they need to be authorized. So that's the idea. So in here they have mentioned authorized money broking companies and licensed finance companies. So we have also licensed microfinance companies. For the moment, we have 4 licensed microfinance company as at 21st/6/15. So then they are earlier before I think it was established in 2016. So before 2016, before introducing the Montreal Act, we didn't have a proper regulation to monitor the microfinance company. So at that time, there were many, around 10-15 microfinance companies. And there was a huge issues raised about their services. It's not vulnerable, and the way they are recovery and how they perform and charging interest rate is quite higher than the market interest rate, than that means any other financial institution interest rate. So they are recently in control to monitor them. So then after introducing this Montreal Microfinance Act in 2016, so then all the microfinance get regulated. So then it was highly benefited to low and poor community. Anyway, this microfinance companies is addressing low and poor sector. So then low income and poor sector. So then sometimes most of the surveys techniques researchers has said once they to overcome their financial issues, they went for microfinance loan they end up with further debts. So then they identify there isn't upliftment of quality of life, or there isn't a personal growth, or that means, or the life-wise growth. So then they end up with further debts. So then, because of that matter, they are identifying the regulation of the microfinance companies is required. And the interest rate they are charged and the recovery method. So these are all are not under the existing law and governance. So then they have regulators now it's performing smoothly. That's the idea. So you can read and have in detail. I have taken important points. So then you go again to our PowerPoint presentation. So then